So what you do is, after you get your first move down and your next move up, followed by your pullback, then you can start plotting your harmonic pattern by drawing, plotting your Fibonacci retracement. So from X to A, the retracement should be 0.618. If it's less than 0.618, it's not a Gartley. Okay, it has to be 0.618. It has to touch it. Okay, so if it doesn't touch it, if it breaks through it, it's okay. If it touches it, it's okay. If it does not touch it, it may not qualify. And may not qualify determining, it's determined based on maybe sometimes the data feed that you're using, because there are different types of data feeds, and maybe one data feed might be a little less than another. Another data feed might be a little more than another. So all of these things we need to take into consideration. Okay. Now, once we have 0.618 retracement of X to A, we can now plot another Fibonacci retracement for the next leg of the pattern. Okay. So we plot the next leg of the pattern from our A to our B. Okay. And this one should be 0.382 or 0.886. As you can see here, 0.382 or 0.886. Now, let's go back to our chart here. We have, let me just adjust this Fibonacci labeling. I'm going to label it on the other side, the right side. Wonderful. So we have 0.382 over here, and we have 0.886 down here. It did not get to 0.886, but it did hit 0.382. So this is good enough to qualify as 0.382. Okay? So once we have this measurement, now we're looking for the price to go up. All right? So the price starts to go up. Once it breaks the B leg, once it breaks the high of the B, now you can forecast where your D should end. And at that point, we can now create our area of confluence, because our D leg should be ending at 1.272 or 1.618. But when that ends, it must line up with the fib retracement of X to A, that is 0.786. Okay, so 786 and 1.272 or 1.618 must line up. Now, when I say line up, they don't have to come exactly the same. They just need to be close to each other. Okay? Once they're close to each other, that qualifies as lining up. And what you can do is create a zone around that area. We call that the area of confluence. And you wait for price to hit that area and reverse. All right, so let's bring this back over here. So let's pull on another Fibonacci tool here. Wonderful. So as you can see, I'm going to take off this one. Wonderful. So I took off that one, so we only have two Fibonacci tools on right now. Less confusion. So we're looking for 1.272, and this is 1.272 here. As you can see, 1.272. And I'm going to edit this Fibonacci to 786. All right. So we have 1.272 and we have 0.786. As you can see, it falls exactly in line with this zone that I have drawn here. All right. Next zone is 0.786 and 1.618. So you have this zone drawn from 0.786 to 1.618. All right. Now, once we have that drawn in, you simply wait for the price to hit that price level and reverse. Okay. So once the price hits the top of either one of these zones, you just need it to touch the top. Once it touches the top, you are entering short. Okay. You enter short. If it goes past a little bit, you can enter short again. Okay. Now you may have 2 trades or 4 trades or how many trades you choose to put in, and you're just waiting for the price to reverse. Okay. Where do we set our stops? Let me just remove this Fibonacci. Wonderful. Where do we set our stops? I set my stop at the fib level of 1.13 of X to A. Okay, so I use Fibonacci as well to set my stop loss. All right, so the stop loss is here. Once the price does not hit that level, you will be in your trade and be able to catch that move to the downside. Now let me just remove this Fibonacci. Just don't want the price to get too clustered. And let's look at where we set our profit targets. So profit targets, we're looking at from C to D, and that is the top of the D. Whichever is the last PRZ that you hit, you will set the fib retracement to that level, the top of that D. And you're looking at 0.382. You're looking at the 50% retracement of C to D. And you're also looking at the 0.886. Let me just put in the 0.886. Wonderful. So you're looking at 0.886, which is this level. And other traders also look at the 0.618, but I prefer the 0.382 and 50%. So once I make these two, I'm taking off 2 of my orders, and I'm leaving another 2 on. So generally when I trade, I use 4 trades. Okay, so I take one off at 0.382, I take another off at 50%, and I wait for 0.886, and I take another 2 off. Okay, if I see that price comes below or comes close to 0.886 and it starts to reverse, then I take another one off and I just leave one on until it gets to 0.886. Okay, as you can see in this example, the price did come and surpass 0.886. There are other patterns in the market that you can use to forecast the move down as well. But if you're just using plain harmonics, then you just simply use your Fibonacci retracement tool. Okay, so basically you use the Fibonacci retracement tool for everything. You use it for the construction of the pattern to get the measurements. You use it to set the stop, and you use it to set the profit targets. Okay, so this was a short introduction to harmonic patterns. Thank you so much. I will see you in the next video.